Rating agency CRISIL has downgraded the debentures of Jharkhand Road Projects Implementation Company to D or default status. Now, why is this news? Because Jharkhand Road is a subsidiary or a special purpose vehicle owned by the beleaguered ILNFS. In fact, this SPV is owned by a group company, ILNFS Transportation Networks. Now, the reason why this downgrade is causing fresh angst in the financial sector is that initially only loans and bonds of the parent companies, ILNFS and ILNFS Transportation Networks, were supposed to be in default. But the various projects or SPVs which had enough money in their escrow accounts to pay dividends or interest were not expected to be defaulters or NPAs. However, banks and mutual funds realized last week that the NCLAT order of October 2018, which ordered the restructuring, remember, of the ILNFS group, included all its subsidiaries as well. The financial sector learnt of this bad news when Jharkhand Power wrote to its trustee, IDBI trusteeship company, in early January to stop all payments from its escrow accounts. By Jan 15, CRISIL had downgraded Jharkhand Power from Jharkhand Road Projects from AA to BB. On Jan 21, Jharkhand Road Projects defaulted on its interest payment, obviously because it couldn't touch the escrow money, and CRISIL then downgraded its debentures to junk, that is D rating. The rating agency has similarly dealt with another SPV, Northern Karnataka Expressway project. In a domino reaction, rating agency ICRA has put under rating watch several funds of AMCs like UTI, HDFC AMC and Aditya Birla AMC. These funds own NCDs of ILNFS's SPVs. Okay, so the questions we are asking today are: one, what happens next? Will someone challenge the NCLAT order and give some relief to mutual funds and banks who have actually invested in safe instruments? Two, what is the fate of the mutual fund investors who want to disinvest from the fund? And thirdly, more importantly, what is the sanctity at all of ring-fenced arrangements in all other infrastructure projects? So these are very fundamental questions that are being raised by the NCLAT order. To answer some of them, we are joined by Subodh Rai, the Senior Director at CRISIL Ratings, Shardul Shroff, Executive Chairman, Shardul Amarchand Mangaldas and Company, and A. Balasubramanian, the CEO of Aditya Birla Sun Life Asset Management Company. Gentlemen, thank you very much for joining me. Let me come to you, Shardul, first, because this looks actually more like a legal problem. The NCLAT's order seems clear that all the subsidiaries will be included in the ultimate restructuring. Now, what is the way to get out of this? Should people like Bala challenge the NCLAT order in the apex court? Can the MCA itself talk to NCLAT and ask them to review the order? What's the next step for relief?
I think the order was passed on 15th of October 2018.
Yes.
And clearly it prevented any lender effectively from making any step for foreclosure or enforcement, acceleration, premature withdrawal of any term loan, corporate loan, bridge loan, commercial paper, debentures, fixed deposits, guarantees, letters of support against us. So right from the inception, that is the first order passed by the NCLAT, there is a order sort of restraining lenders from accessing the properties or sort of recovering anything from the properties of ILFS group, pending the entire restructuring of the group or finding out the viability of individual companies. So this is effectively like a suspension order of acceleration and from the right of set-off or the right of lien from any accounts lying with the creditors. So this was an order, incidentally, which was taken by the MCA itself.
Yes. Because
Ministry of Corporate Affairs invoked the provisions of Section 242, 241 and 242 of the Companies Act and asked for these reliefs as the government of India, Union of India, basically saying that this could have an impact on the financial markets.
Yes,
So,
but going by the behavior of the government and the rating agencies and actually the SPVs themselves, because the first letter gets written only on Jan 4th by one of the SPVs, it's quite clear that nobody understood the ramifications of the NCLAT order. Shardul, I'll come to you in a minute. Let me ask how Subodh Rai and the rating agencies intend to go about it. Subodh, it's classified as junk, but chances are that somebody is going to ask for a review. Now, I don't know who will do that, but do you think that under the circumstances, it can be quickly reviewed if somebody challenges this order? When do they get relief? Because most of those SPVs have enough money.
So I think that's a fair observation, Lata, that if you look at most of the SPVs, there's ample liquidity available. But the key challenges is around the legal issues that has emerged, that whether NCLAT order actually stops regular debt servicing as well. And different stakeholders, whether it is trustee or escrow bank, are having their own interpretation. As a result of that, default has happened on this instrument. Coming to your point that if situation changes tomorrow, whether we will be reviewing it, yes, of course, we will be reviewing it. And as and when situation changes, as and when we get more clarity on legal issues around this instrument. And we'll be reviewing this rating within the boundaries of SEBI guidelines that is there.
Okay. So are you saying that some banks are allowing the money to be paid as interest and some are not?
So if you ask me, at least, what we understand from some of the investors in the market is that interpretation was not very clear that how to look at this NCLAT order. If you look at, in this case also, let's take the example of Jharkhand road projects. Here, I understand trustee had taken a stand that payment should be made and order is not applicable on debt servicing, regular debt servicing. But if you look at escrow bank, they were not very clear that how they should interpret the order and they held back the payment.
Oh, so the banks held back the payment first. The trustee did it, the trustee was willing to pay.
As we understand that trustee has completed all the documentation and had given necessary instruction to the escrow bank for payment.
Okay. Bala, are you the one or are you mutual funds under AMFI planning to challenge the NCLAT order in the court? What is the course of action for you?
I think clearly for us it's something new in the sense that the mutual fund have been one of the large investors like any other pension funds or insurance companies in the SPV vehicles, and given the fact that SPV vehicles are generally structured in a ring-fenced manner and it's secured against the cash flows, that too the cash flows are receivable from the state governments or NHI kind of model. And that's where I think all of us have been, being one of the large player in the market, have been actually been one of the funder on this segment of the market.
Yes.
So definitely I think earlier mentioned about the NCLT order which came in the month of October, it covers everything, and frankly none of us felt that SPVs will get covered under that, and definitely it came as a shock to all of us. And now having seen this shock, of course we have to deal with that.
How do you deal with it?
And the way of course we deal with that is, one, there is a clear cash flow which is there. I think there is an escrow mechanism.
No, cash flow is there. See, look at the CRISIL note itself.
Yes.
The CRISIL note says that Jharkhand Road Projects has enough wherewithal to comfortably service the NCDs from its own cash flow. As on December 31, the company had 345 crore of liquid funds for debt servicing, which is 4.5 times its quarterly obligation of 76 crore.
Correct.
It has the money, but it's not paying.
Exactly.
So what do you do?
No, of course, clearly the one, is the structure is weak? Absolutely no. As you rightly mentioned, there is enough cash flow has been built, including the DSRA, especially for serving the debt, both for principal as well as for the interest. There is absolute no weakness in the structure. And nobody even questioning the sanctity of the SPV. And given the fact that this is the model in which most of the refinancing and takeout financing is done in the country. Only the confusion which comes in, given the fact that NCLT hearing is coming forth, and the banks seem to be having some different kind of view. I think earlier you mentioned about the trustees.
Okay, so you are now expecting to make your voice heard in the NCLAT hearing?
Yes, we'll of course make a representation. At the end of the day, we are one of the parties who have been owning this instrument and knowing very well these structures are well ring-fenced. There's absolutely no risk from the longer-term point of view, and also able to see actually balance. You cannot take it out.
Okay.
Whereas the banks had, of course, their own advantage, being the bank
but the hearing is later this month. So do you think you can get relief on 28th?
I think we are quite confident. At the end of the day, whatever the decision that is being driven, and both by the MCA and the government, I'm sure they would take into account the longer term, the interest of the bond market, the longer term interest of the resource need that I think each segment will come across. And therefore, I think we believe that...
I don't know if the NCLAT thinks of so much when it is giving a legalistic order, or it may not have even given an order like that.
No, of course, given the fact that it's also being driven by with the intervention of the government, I'm sure when they look at, they will of course look at the holistic, the whole from the economic point of view. I'll tell you where my skepticism
emerges. Our colleague from Delhi has broken a story that the government, that is the Department of Financial Services, is planning to write to the Reserve Bank to not require provisioning for these loans because they see it as temporary. Now, you know, if it is, the banks will be required provisioning only after 90 days. They are not going to be asked for provisioning now. So even within 90 days, it looks like the government is not so confident that the issue is going to be resolved. Otherwise, why this request? Shardul, what is the legal standing? Assuming, the AMCs, the mutual funds, make a representation on 28 January, do you think they can get a carve-out that escrowed accounts should not be included in the overall restructuring? Do they have a case?
See, Lata, what happens is that in the interim between 15th of October and 11th of January, which is the last order from the NCLAT, parties actually applied to the NCLAT to be joined as interveners and to be heard by the NCLAT. So the NCLAT actually granted an order saying that any 5 members who are lenders can be joined in the proceedings. They can file their replies and they would be heard. That hearing is now coming up on 28th of January 2019. So this whole opposition or review or cancellation of the order of 15th of October is pending argument before NCLAT. They would therefore review the question as to whether this order needs change, this order needs withdrawal, or its order needs to be strengthened, depending on how the government of India argues the matter, because it's at the instance of the government that such an order has been passed. So, as I see it, this question is squarely before the NCLAT, and it's for the NCLAT to decide this question. NCLAT will not go into the issues about down rating. They would not go into the issue of how the impact of the escrow is going to be, because their basic question is jurisdictional as to whether this order was itself capable of being passed. So it's the side issues or the smaller issues will not really gain that much predominance in the hearing. It might be shown as an effect of the order, but ultimately it's going to be a jurisdictional question as to whether such an order should, ought, or can be passed in such proceedings.
By the NCLT, right?
NCLAT.
The NCLAT will decide whether it has jurisdiction. I'm sorry,
yes,
what will the NCLAT decide?
Parties have opposed it, and that hearing on a sort of contested basis is going to happen on the 28th of January.
Okay. So if it is only going to decide jurisdiction, then the banks who may speak about the impact on their, on this ring-fenced instruments are unlikely to get relief, you think?
See, what would happen is that when you oppose such an order, you will oppose it with reason. You will state why you feel that the order should be passed or should not be passed. Whatever normally in an adversarial proceedings happens will be argued. And in those proceedings, questions will arise as to whether modifications are necessary or not, because parties will claim that. Now, if the government of India demonstrates that no such an order is necessary, because otherwise it will lead the company, the whole group into insolvency, the tribunal may not make any change in the order. So it depends on how the balance of equity is argued, and what sort of release can then be fashioned by the NCLAT. They may just restate the order and confirm it.
Okay.
So it
So
depends on how the
Shardul, if you are an advisor to one of the banks or AMCs, what chance do they have of getting relief from the NCLAT before it passes its final order?
See, it's a matter of hearing, and therefore it's a matter of how the government of India defends this order which is granted by the NCLAT, points out how it is in public interest to support such an order and not modify it, because the effect of insolvency in public interest will be far bigger than making the companies start paying the banks. Because if there's any chance of revival from the liquidity in the system and liquidity arising from sale of assets, I think that would be much better, because if the monies are collected and the business of the company is effectively transferred to other entities by an process, then the money would be sort of held in escrow or held in a manner as the rights which are stipulated by.
All right. So what you're saying is the near-term pain is okay, but the NCLAT will concentrate on the longer-term gain and therefore may actually support that all the entities be treated as one. All right, that doesn't sound like immediate relief, but gentlemen, please stay on. I have a few more questions and a lot of investors are watching. Well, the IL&FS mess just got messier with the rating agencies downgrading one of the instruments issued by one of the subsidiaries of IL&FS or an SPV of IL&FS. What is the way out, and does it get worse before the problem gets resolved? I've been speaking with Subodh Rai of CRISIL, Shardul Shroff of Shardul Amarchand, and A. Balasubramaniam, the CEO of Aditya Birla Sun Life AMC. Well, Subodh, did you all hurry? Couldn't you all have waited because you could see that each of these individual entities are well hydrated, they have a lot of liquidity? You could just have waited for the hearing to see how things go, no?
So let me explain you how the rating power function. If you look at rating scale, Lata, it's a 20-point rating scale. From AAA till C, you can say, okay, there's more of analytical opinion. When it comes to D, the definition is black and white as per SEBI. SEBI has come out with a circular dated 1st November 2016, when they have very clearly defined the definition of default, that if a payment is missed by 1 day or even single rupee of the payment is missed, either interest or principal, it will be construed as default. So our action is absolutely in line with SEBI circular that came in November 2016. So there's absolutely no, if you ask me, Lata, flexibility in terms of saying, okay, fine, some fund is available, let's go, absolutely no grey area, Lata.
Okay. You are exonerated, okay. Well, Shardul, what is the implication for other ring-fence structures now? Everything, the government of India perhaps does not service all its debts immediately on time, but a certain SPV created by NHAI is still respected, and a lot of foreign funds and Indian funds invest in them. What happens to all these? Will they all not be questioned? The very idea of escrow.
What would happen, Lata, is that ultimately these units will, when on a going concern, will be tried to be sold, and the realization value of the sale is going to be then applied basis the inter se security creation and the priority of the charges. So the physical asset structure will effectively get into structures which are then dealing with money proceeds and money realizations. No rights are going to be lost as such, but the rights will, instead of applying to physical properties, will apply to money. And the distribution will be then decided in accordance with the priorities which are stipulated. So if the ring fencing has been done properly, the money which is realized from the sale of the enterprise or the sale of the undertakings or subsidiaries of IL&FS will get appropriated or will get adjudicated in accordance with the priorities which already exist between lenders.
Yeah, but that is in the in the slightly medium term, when the entire thing is settled, which could take 3, 4, 5 months. We don't know. Now, in the interregnum, it's quite possible that one of these subsidiaries, just hypothetically, an SPV may need money, but you've already called it a defaulter, an NPA. No bank will lend to it. we've created a problem unnecessarily, haven't we? Why not sell it as a going concern, even when it is honoring its, dividends or interest obligations?
It's precisely that is what is ongoing. What is happening is that even if the company has liquidity and is not really distressed in that sense, they are trying to liquidate or they are trying to sell enterprises and realize money. So it's not as if they're only they're only auctioning the hopeless assets, but they're auctioning every kind of asset which can realize money and pay to the financial market and all its constituents, so that the market liquidity is not affected and the general larger injury is not caused. It's not. It effectively it may have a short-term effect, undoubtedly, but that happens in every company which suffers an insolvency event.
This argument is okay for a bank, but it is not terribly okay for a mutual fund investment, where it's actually one-day money that a mutual fund has, and so people can walk out. How do you expect investors will behave? And how will you calculate the NPV, NAV, when you know that the money is going to come at some point, but it is not with you now?
Yeah, I think first and foremost, I think Shardul mentioned very clearly that these are, as long as the ring fencing structure is relatively insulated, then in the mechanism of that who will get the first sale proceeds and so on and so forth, that I think is very clear. And second is, these are all performing good assets. The solvency of each of the assets are not in the question mark. So therefore, realizing the value that is due to this kind of assets also is equally high. And third is, I think you mentioned about earlier the cash flow. Well, the cash flow is, of course, enough cash flow is there, even for servicing your principal and interest payment. There is also enough cash flow which is built in each of the structure to maintain those assets. Therefore, that's also not in a question mark. Therefore, asset is not going to become weaker. The issue is about 4 to 5 months. I think
so
now
how will you, if an investor comes tomorrow to redeem mutual funds, how will you value it? Will you value it at 50%? Will you value it at 0?
No, first and foremost, of course, in this case, since the rating, of course, we need to our job is 2 things. One, of course, explain. And second is give a necessary impact on the rating downgrade. As per the rating downgrade, whenever it defaults to, say, D grade, we normally value the 100 rupees value at about 75 to 80 rupees. That's what we have done. And most of the NAVs, including ourselves.
At D, you said 70 or 80. Now it is D.
No, it's for the D only. Because even as a D, this is not a D where there is absolutely no money to pay. It's a D because of certain actions which are taken by the government. Therefore, the money is I'm able to see the account, money in the account, but I cannot draw it down. But the money cannot be operated for any other purposes. Therefore, there is ring fenced even to that extent. Therefore, though the value of the NAV, to the extent of the exposure that we may have in each of the assets, the NAV will have an impact. The investor should not get too much worried for one simple reason. This is not the asset which is going to be completely written off.
No, absolutely.
As the sale proceeds, as the sale exercise starts happening, the money will not start coming back.
And I think the investors have been very responsible.
Have been very responsible for this. And second, nobody comes for one day. Most of the investors do come for longer term, and fixed income and asset
they will have to pay salaries at the end of the month, and at that time they'll have to redeem. So they will have to have a fair idea of how much they lose.
No, fortunately, another thing I wanted to say, these are the schemes where generally the big ticket corporate investors are not there, because these are the investments come in the debt funds which are longer term in nature. And therefore, that risk is relatively lower, actually.
Okay. Well, very quickly, I'm absolutely borrowing time from the next show. Shardul, would you say to a mutual fund investor, he need not panic?
I agree. He would not panic, because ultimately the underlying value still subsists. It is as it was mentioned, this is a government consequence, or rather a NCLAT consequence, which has a technical effect in terms of rating, but property underlying is still there.
All right. Fine. That's soothing to hear. On behalf of the investors, I would thank all 3 of you for joining in and explaining the ramifications of this action of the rating agencies to downgrade an instrument. It is a temporary pain, and the expectation is that as those organizations, those SPVs get sold off, there will be relief for the investors. It's a temporary loss of NAV. Thank you very much, Subodh, Bala and Shardul Shroff, for joining in this special edition of the ILNFS Mess.